We've consolidated for a couple of weeks here, and I think we're gonna come out of this consolidation this month and have, pretty strong July and probably a strong August. So I have a target for this year for silver of $200, and that's still my target. I just raised it in June, in fact, so at the beginning of June. I have a target of 7,000 for gold. So that's what I think we get pre-bust this year. The next cycle, because of all the money printed, your leaders in the next market, leading assets and leading stocks, are going to be in the commodity area and the precious metal area. So my target for gold out in the 2030s, probably by 2032 or 3, is 20,000. My target for silver is 1,000.
Quick favor before we begin: if you enjoy this video, don't forget to like and share it. Every like and share helps YouTube recommend this video to more people, which really helps the channel grow.
The financial markets are showing incredible resilience, breaking out of temporary periods of sideways movement to prepare for an aggressive leg upward. Strong corporate earnings and stabilizing macro trends hint that the primary bull trend is not only intact, but accelerating into its final stages. David Hunter, a highly respected macro strategist, known for his bold market calls and decades of independent forecasting experience, underscores that the stock market looks completely robust on longer-term charts. He highlights that we have officially entered a historic parabolic phase, pointing to a final, explosive blow-off top before any secular rollover becomes an imminent threat. According to his latest calculations, the S&P 500 index is on track to hit an astonishing target of 10,000, while the tech-heavy NASDAQ composite could rocket to 36,000. Additionally, the Dow Jones Industrial Average is projected to reach 67,000, supported by a massive multi-year bond bull market triggered by cooling inflation and rapidly dropping interest rates. Now, we present the clips from David Hunter's interview. Before we continue to discuss this, please hit the like button, subscribe to the channel, and ring the bell icon. Thank you, and enjoy the video.
I have a target for this year for silver of $200, and that's still my target. I just raised it in June, in fact, so at the beginning of June. I have a target of 7,000 for gold. So that's what I think we get pre-bust this year. Then in the bust, you could take silver down 70 or 80% because it's very cyclical. You could take gold down 50%. Actually, ironically, if you look at it, if I'm anywhere right on my numbers, gold at 7,000, if you get down 50%, that takes you down to 3,500. That's kind of a very nice place on the charts. In fact, that's where a lot of the bears today think we're going now. I don't think so. If you take silver down from 200, you can get back to basically that 50 level, which marks the breakout from the 2000 top, 48 or 50. So, you can fall 75% and get down to 50. And I think those make sense to me, is that's what you might see in the bust. From there, and again, those are just guesses. I don't know that for sure. But if that happens from there, the next cycle, because of all the money printed, your leaders in the next market, leading assets and leading stocks, are going to be in the commodity area and the precious metal area. So my target for gold out in the 2030s, probably by 2032 or 3, is 20,000. My target for silver is 1,000. So, if you're at 50 at the bottom of the bust and you go to 1,000, that's a pretty nice return. And that's silver. The miners obviously have leverage to that, so they can even outdo that. And same thing with copper. I mean, every commodity, most commodities, including ag commodities, I think are going to go through the roof. So I don't know where copper goes. It might be 20. I look at the futures. My target on copper for this cycle is $8. I may raise that. My next cycle, who knows? Is it 20? Is it 30? I don't know. Natural gas, which is down in the 3s, it could go to 50. I mean, oil, I have a target for oil next cycle, post-bust, probably out in the 2030s of 500. Wow. So oil in the bust can go down to 30 and go from 30 to 500. So the commodities are going to be the area of leadership next cycle, commodities and commodity stocks. And that's what we have. Every cycle is new leadership. This cycle obviously has been tech AI, semis, etc. The next cycle, I believe, it's going to be led by commodities and industrial because of the build out. And consumer, if you think through the whole scenario, the consumer's going to get hit hard because the market tanks, right, in the bust. The consumer is going to be hit hard because of unemployment if the economy tanks. Coming out of the bust, and I think you can come out of it sometime in 28, coming out of the bust, consumer's not going to be shop till you drop or, the main driver in any way. I think we are coming to the end of what has been in your lifetime a consumer driven economy.
Yeah.
I think the next cycle, and it's really the last cycle before a huge game changing depression, the next cycle is going to be that reshoring, grid build out industrial cycle. So that's what's going to drive the next cycle, not consumer. That doesn't mean consumer is totally dead, but they are not going to be driving the next cycle.
The consolidation phase observed over the past few weeks is merely a healthy technical pause that refreshes the broader marketplace for its next major vertical extension. There is absolutely no indication of an impending market top, despite widespread institutional skepticism and growing retail anxiety regarding high-flying tech sectors and overextended semiconductor stocks. Instead, the momentum built throughout the summer months is expected to carry directly into a massive, commodity-led supercycle as the old consumer-driven economic model begins to fade. Pre-bust projections for this year place physical gold at a staggering $7,000 per ounce, while silver is anticipated to climb rapidly to a target of $200 per ounce. When the eventual macroeconomic bust does manifest, massive cyclical corrections could temporarily pull silver down by 75% back to its key $50 breakout level, while gold might experience a 50% retracement down to $3,500. This steep correction will ultimately set the stage for an unprecedented inflationary cycle by the 2030s, ultimately driving gold to $20,000 and silver to $1,000 per ounce as money printing hits an absolute boiling point. Now, let's get back to the interview.
I tend to look at weeklies and monthlies and not dailies as much, but if you look at even the dailies, but the weeklies and monthlies, the stock market looks great. I mean, you're in a full bull mode. And yes, you get these consolidations, some are bigger than others. We had one obviously in response to the Iran war back in, February, March, into April, I guess. But it's, had a big run and then you've spent a few weeks kind of consolidating that. That just refreshes things for the next leg up or the next move up. If you look at it on a monthly, I think we started the parabolic a couple months ago. If you look at it on a daily, yes, it looks like, hey, it's kind of gone sideways to down, but on a monthly, it's, up and away. And either way, when I look at it, it really does look like everything's intact here for a very strong next several weeks and probably next couple months. My view hasn't changed. I've raised targets several times. Obviously, in my most recent raise, I hiked my S&P target to 10,000 and my NASDAQ target to 36,000 from 32,000. And I still got a very bullish view on the Russell, which I think can go to 4,000, and the Dow at 67,000. So my targets have been raised several times in the last couple of years. The bull market's still intact. I see nothing to indicate a top here. I know a lot of people are very concerned about the market here. And I actually think we're about, we've consolidated for a couple of weeks here, and I think we're gonna come out of this consolidation this month and have, pretty strong July and probably a strong August. So nothing is there to suggest that any kind of a rollover is imminent. On the other hand, AI in particular is up on stilts and semiconductor stocks are up on stilts. So we are in a higher risk area. But my whole thesis, as you know, is that we are in the end of a long secular bull market, one that I believe began in August of 1982. So we're coming up on the 44th year anniversary in August, and markets end, and oftentimes big secular moves end in a parabolic, or often do, and that's been my case. Is that I think we will see this thing have a final blow off, and And then I think you got to worry about the other side of the market. But
Mm.
as of right now, I think the coast, I don't want to say the coast is clear. There are plenty of things to keep people worried. But I think what you're going to see through the balance of this summer and maybe into the fall is a lot of those institutional investors in particular who have had one foot out the door throughout this becoming more bullish. Maybe it'll be that Iran looks clear, that, things are clearing up there and it's not, it's not World War III.
Yeah.
Maybe it'll be the continued drop in oil prices. Maybe it'll be the fact that people start seeing that, hey, the economy, although it's not robust, it still has legs. And certainly what it'll be is that earnings remain strong, and they've been amazingly strong this year. So I think all those things. And one other thing that I think is going to add to that as oil prices drop, as um, you know, inflation rolls over, I think you're going to see the bond market finally come out of what is a 2.5 year bottom and have a pretty strong bond bull market over the course of the next year or year and a half. And that will, interest rates will be dropping. That'll be another wind at the back of the market.
The global energy and industrial landscape is undergoing a massive structural transformation that will completely dictate market leadership over the next decade. As the traditional consumer-driven economic engine loses its steam due to rising structural unemployment and macroeconomic pressures, a massive reshoring boom and grid infrastructure build-out will take its place. This pivotal transition ensures that industrial assets and hard commodities will completely outperform traditional tech and artificial intelligence infrastructure in the upcoming market cycle. Crude oil is projected to find a cyclical bottom near $30 during the deflationary bust, before launching into an exponential rally that could see energy prices skyrocket to $500 per barrel by the mid-2030s. Similarly, copper is targeted to hit $8 in the current cycle, with the potential to reach $20 or $30 in the subsequent industrial wave. While natural gas could surge from its current lows all the way up to $50. Agricultural products and primary metals will follow a similar upward trajectory, transforming the entire commodity sector into the absolute vanguard of wealth generation for forward-looking investors. Share your thoughts about this interview in the comment section below. If you found this video helpful, please hit the like button, subscribe to the channel, and ring the bell icon. Thanks for watching.